Hello traders, hello everyone, my name is Gregor Horvat and welcome to our new episode of Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will cover Euro, Pound, New Zealand Dollar, Dollar Yen, Silver, and quick look at German DAX. So what is going on? Well, we have seen a very sharp drop yesterday on stock market. You can see here I have an overlay chart, and since the US cash opened yesterday, we have seen a drop on stocks. But what is probably the most important if you are trading currencies is that despite this risk-off mode, we are seeing Mexican peso, Japanese yen, pound, Euro, New Zealand dollar, CAD, and even Aussie still holding quite well despite this push down on stocks. So this tells me that if stocks will stabilize, maybe we will now see consolidation till the US CPI figures will come out. So maybe we will see a slowdown of this risk-off mode, and this could be actually a new support for those major currencies against the US dollar. So despite the risk-off mode, I think that even if we get some kind of a short-term rally on stocks, this could be very supportive for very strong currencies, which are strong already now despite this risk-off mode. One of them is very important, I believe, is pound. It's probably due to potential tapering, and of course their decisions from banks can be very similar to Bank of Canada, and obviously something similar could happen with currencies as well. As you know, CAD has been seeing some very nice gains for the last 2 weeks or so, and maybe is pound now in a very similar stage. So if we take a look on the charts here, firstly cable still, I mean, we've been bullish. We expected a resumption higher away from this trend line. The reason was because a move from June 2020 swing lows was not made by 5 waves yet, and more importantly, a drop from February to this March or April levels was not in 5 waves, was rather in 3 waves or 7 swings if you consider a little bit of more complex structure. But still, it was a corrective part of a wave 4 that later unfolded as a triangle. So a triangle, it's an ABCDE pattern that occurs within the higher degree trend. So it's a continuation pattern that sent and caused this very nice and important breakout above 1.4 level. So this is some kind of a bullish bearish level. So as long as we are above that figure, I think that there can be more gains coming. Of course, if there will be some intraday setbacks, that's the level where we want to see a next bounce. Otherwise, this current wave for blue degree will become even more complex. But overall, I think that sooner or later we will see a push to new highs of the year. And if the wave 5 is already in play here, then obviously 1.45 is the next projected target. So I took the distance of wave A because it's the widest leg of this triangle, and then I measured it from a breakout point. Okay, so that's the area where typically we could reach, especially once we are seeing once we are going to see a new highs here. Okay, now let's take a look also on euro dollar. Now euro dollar, as you know, been tracking 2 wave counts. The first one suggested at least 3 wave rally, either for a wave B to retest this trend line, which is now let me just adjust this a little bit, which is now right here. Maybe room for slightly more upside here, but maybe we are approaching this 1.2240 or 50 important resistance here. I'm looking for a very small swing high right here. So this appears to be like a next target here. Even if this will be limited upside, there is still room for more upside. Or maybe we are here dealing with a wave 5 where rise from that swing low should be made by 5 subwaves. So for now, I think that we should stick to this bullish interpretation and be aware of more upside, because if we look at the 4-hour chart, we can see that recently completed this 3-wave setback right at this previous broken swing high that reacted as a very nice and perfect support right here. And even on intraday chart, I mean, this looks like a pause on the way up. This was a very sharp move, while now we are just consolidating. So I think that there can be more upside coming, especially after better than expected just released Germany economic report. So I think that a euro could see more upside, and of course, as I said earlier, especially if stocks will be able to stabilize. Now also New Zealand dollar, where is this one? Okay, here it is. Now New Zealand dollar on a daily chart, I think, remains bullish because this drop was clearly made by 3 waves, and this reversal so far is a very nice and strong one. So I think that we can see more upside here. Looking at the 4-hour chart, what I love, especially from basic technical analysis, is that even this one tells us that there can be more upside coming. I'm looking from a head and shoulders bottom for perspective, which goes perfectly with our Elliott wave view. So based on Elliott wave count, I'm expecting potential wave 3 break to the upside, maybe a very strong one if this trend line or neckline, if we want, can be broken. So I want to see a daily close, let's say above 7,350 or around there. This would probably be enough to make sure that we are breaking out here. At the same time, obviously, this swing level should hold. If we are going to see a straight move to the downside, let's say that stocks just will see another very big drop today or in the next 24 hours, then next support could be here around 70, near 61.8% as a potential flat. But for now, I just think that we could continue higher because, as I said, stocks are maybe already approaching the support. So if we look at S&P 500 real quick, then you can actually see here that I am tracking and observing this potential of 3-wave drop. This could be your wave A, expecting wave B, and then even more weakness for wave C. But even this is a wave A, well, there can be some supports around 41.30, maybe to 41.10 level. So in this zone, I would be expecting maybe just a slowdown of the current bearish drop here. So if this could cause a rally, then of course maybe majors will have another bounce higher. Now let me also take a look on German DAX. Now here we are observing a bullish trend which could resume after current correction will unfold. Well, I think that correction is probably going to be more complex, maybe a triangle or maybe even a flat correction where current wave C could maybe even extend and retest this wave A swing low. But in either case, I mean, the first part was made by 3 waves. The second recovery, wave B, was also made by minor 3 waves, if you look closely here. So in my opinion, this could be part of a flat or part of a triangle. In either case, this can be a complex ongoing wave 4 that belongs to a higher degree uptrend. So if this market will also find a support in the next few sessions, this could be positive for euro as well. And now let's take a look also very quickly on 10-year US notes versus Japanese yen. Well, the 10-year US notes here are coming slightly to the downside, which was the reason for temporary shift into risk off sentiment. And if suddenly we see a break here below this trend line support, then I think that dollar yen could be very interesting. Major pair currencies versus the US dollar could stay consolidating, while we can see dollar yen maybe even pushing prices higher here based on correlation. As you know, if the US yields will see very sharp rise, then sooner or later maybe dollar yen can follow. Okay, so looking at very quickly also at the dollar yen, I think that here we could be making this first leg of a minimum 3-wave recovery, so watch out for potential wave C, maybe even wave 3 for a push towards or close to 110, maybe even 110.50 level. And now finally, let's take a look at silver. Now silver or metals in general are doing quite well lately, and I'm not surprised that investors are shifting to these assets because you have stocks, cryptocurrencies, commodities, a lot of markets that are at extreme levels. So if you're looking to shift to new or some different sectors, then maybe metals can be very interesting, because after all we are consolidating here since August 2020. So I'm looking at 2 wave counts. Now the first wave count could be a potential flat correction here for wave B, maybe even wave 2 with a finished ending diagonal here that made a very nice rise so far when market moved out of this wedge pattern. Or if we'll just see some kind of a pullback in the next, let's say, 2 weeks or so, then this could even be a triangle, but also a bullish pattern. So in either case, I think that silver has room to recover. Traders, thank you very much for your attention. I hope that you enjoyed this video, and I will again catch you next week. Bye.